Peace. I'm back. This is Absolute from the Absolute Boss Collective. And in this video, I'm going to talk to you about the bid and ask spread. This is something that affects both stocks and options. Okay. Once you have the understanding of the bid and ask spread, it can improve your profit potential. Okay. So before we get into that topic, all right, if you're new around here, consider subscribing to the channel, okay? By subscribing to the channel, you are coming into my personal trading journal. You can learn all about my wins, my losses, my development as a trader, things I do, and use these things to benefit yourself. Learn how to make money in the market by trading, scalping, swing trading, investing, what have you, okay? Create a second stream of income for your people, for yourself. Replace your job, okay? Get this money in the markets, man. That's what it's all about here at the Absolute Boss Collective, okay? Hook a brother up, man. Drop kick that like button right now, okay? It'll help me out. It helps out the channel, and therefore it'll help you out, okay? Hit that notification bell so you can be aware of new content when it becomes available. Most importantly, I have decided to run a $500 giveaway. One of you guys out there in YouTube land, one of the profit people, is going to win $500. All you have to do is check out my video on the $500 giveaway. It's 5 simple, easy steps that you have to follow, okay? Share this page, share these videos so we can get the word out. When I reach 1,000 subscribers, whether that is tomorrow or next week or next month, okay? Whenever I reach that 1,000 subscribers, one of you guys is going to get hit off with 500 big ones. And without further ado, let's get into the video. The bid and ask spread. Okay. The bid and ask spread is the difference between the bid price, which is the price a buyer is willing to pay for a stock or an option. Okay. The ask is the price that a seller is willing to accept for that stock or options. So the difference between the bid and the ask is called the spread. That spread is really what lines the market maker or the broker's pocket, because we retail investors, okay, have to pay them, okay, pretty much. They got their hand in our pocket because they are matching buyers with sellers, okay? Now, this is not a big deal if you're trading issues or stocks with large liquidity, okay? Because this is all about supply and demand. So if there's a lot of shares available, a lot of people willing to buy, a lot of people willing to sell, that's liquidity. That's going to make it easier for you to get in and out of a particular stock, therefore making the spread very small. You want to buy stocks or options with a small spread, 5 cents or so. Like that should be the most that you're paying, okay? If you're buying a stock that has a higher spread than that, okay, I can't say that you can't be profitable doing that. Like you can win doing that depending on the other circumstances. You know, typically whatever profit that you're going to have to make is going to have to supersede that spread. So you can buy a stock with a 50-cent spread. That means that thing better move about $1 or more so that it can cover that spread that you're paying. Okay? One of the things that you need to be aware of is that as a retail investor or trader, we're going to always be on the short end of that stick. Okay? And I have some examples to show and prove that. So if you take a look at my first example, which is ticker symbol USX. It has a bid of $9 and an ask of $11.95, which makes the spread $2.95. So let's look at this. If you were holding this stock and you were trying to dump it and get rid of it, you would get $9 for it. That's the bid. That is the recognized price by the market, whether it's the New York Stock Exchange or NASDAQ. These things are done electronically in most cases. So if you were holding that, the agreed upon bid price is going to be $9. So you're going to sell that stock, you will only get $9. On the other hand, if for some reason you wanted to buy this stock, you would have to pay $11.95, okay? Because that is the recognized ask price in the market right now in this security. Now, if you look at the volume, it shows you that it is not liquid. The volume is 254,000 and some change, okay? That's not really a lot of shares, and that's why you have that wide spread. You want to generally stay away from these type of things because it's going to be very hard to get out with a profit, okay? Now, on the other hand, let's look at IDEX. It has a bid of $3.12 and an ask of $3.13, a 1 cent spread. This is much better. This is much easier for you to get in and out. Now take a look at that volume. 52 million shares. Very, very, very liquid. Okay? So you want to always consider this when you're going into an option trade or a stock trade. Pull it up, look at that bid and ask, okay? And, you may want to think twice if you see a huge spread, okay? I hope that answers all of your questions. If you have further questions about the bid and ask spread, leave them in the comments down below. All right. This is Absolute from the Absolute Boss Collective, telling you to look, listen, and learn. Work, wait, and win. Let's get this money. Peace.